G'day folks, Jim here from FX Charts, Thursday the 20th of March. Thanks for tuning in. Well, we had the FOMC, tapering is going to continue pretty much as expected really, but the market bought the dollar heavily on fears of a rate hike, which although it's not likely to be really until the first half of 2015, it got the market running, and everything's sharply lower against the US dollar today. And certainly the dollar index has also turned sharply higher, so we could see some more dollar strength in the days to come, I suspect. We'll go and have a look at the charts though. We'll start with the euro, and it broke down sharply through minor support just around 139, and it's headed down to a low of 138.09. Now the hourlies are becoming rather oversold down here, and I think for the next, well, probably until the States comes in again tomorrow, we're probably just going to drift around here. But look, as we look further out, we're sitting on this pivot here. Now that's at around 138, the figure. If we go below there, which would also take out this rising trend support here, then I think we're possibly headed down towards 137 3/4, maybe even 137 1/4. The 4-hour indicators are suggesting that we're possibly headed a little bit lower now, and the dailies also, they're looking to me as though they might have topped out. So all up, I think the dollar does look reasonably strong, and if we saw a rally today towards around where these lows are here, this is all 139.50, I guess 139.45, something like that. If we saw a rally there on the day, I think you'd probably sell it. Eventually it does look to me as though 138 could give way, and as I say, if it does, then expect to move down towards the 137 3/4, 137 1/4 over the next 24 hours or so. Moving forward to dollar yen, well, that equally soared higher. It's been up to 102.63, and it's consolidating now just below there as we head into the Tokyo session. There's support down around here, 102.30. That's the 200-hour moving average. So that might support it on the day. The hourlies are becoming rather overbought, so I think the potential for any further upside in today's session is rather limited. But the 4-hourlies certainly over the next 24 hours or so, I think we possibly could head higher. There's decent resistance up around here, just around this 103 figure 10 area, and I think that might cap it for a little while. But the dailies, they're pretty much flat actually at the moment. But we have got the 100-day moving average sitting here 102.36 or so. Where is it? 102.30. So that might be a bit of a pivot for the next couple of days. But the 4-hour charts are looking as though they're strongly wanting to go strongly higher. As I say, the hourlies are kind of capping it though. If we were able to take out this 103.30 level, sorry, 103 figure 10 level, then I think we are headed up here towards 103.60 over the next couple of days. But that seems a long way off to me right now. I think we've got Kuroda speaking later on today, so wait and see what he says. But on the day, I think if we saw it back down towards 102, 102 the figure, it's probably a buy down there, and over the next the course of the next couple of days, probably heading a little bit higher. And we've got this resistance here in the meantime, but ahead of 103, around 102.80. That may be seen, but once again, it could be a bit of a cap given the hourly overbought conditions. Cable, well, that had a pretty choppy session. We had the Bank of England minutes and the unemployment numbers, which were not too bad. That took cable up to its highs, but it's since turned sharply low. Now it's broken this pivot here, which I'll show you. And if it stays below sort of 165, sort of 40.50, then I suspect we're headed lower once again. But that might have been a false break, and if we do get back in here, let's go further out. So we've got this channel as marked by the pink lines. Now, right now we've broken it, and the market's making up its mind whether it wants to stay below it, which is also below this rising trend. What has been support now, it looks like it's going to act as resistance, and that all comes right around the current level, and around 165.40. So watch that space. The 4 hourlies look as though they are pointing a little bit lower, but they're not really looking decisive at the moment. The dailies, they are looking a little bit negative, and if we do stay under this rising trend support, which goes back about 12 months, then I suspect we can probably head down towards this 164.15.20 level, that being the 100-day moving average. Nearer home, there's support here at 164.75, which is 61% of this recent move higher. So that'll provide support, and then below there we've got some more support down. Well, this is below 164, actually 163.85. So we've got the 100-day moving average, as I say before then. And then below there, 163.5 is the first major FIBO support. Dollar Swiss broke higher, quite sharply higher. Really, it's been up to about 88.30. Now the recent pivot that we were watching is around 88.50. That's going to act as some resistance, but I don't think we're going to get there today. We have broken up above the top end of the recent channel though that we've been watching, and as I say, a move up towards 88.45.50. It's rising. It's a descending trend support resistance here as well. So 88.50 above there would take us back to 88.75, and then back up to this sort of trend resistance here, which is also the FIBO level around about 89.25. Now I don't think we're going to get there today, but the four hourlies are looking a little bit positive. So I think possibly on the day dips are buying opportunities. The dailies also look as though they might be turning a little bit higher. I wouldn't get too excited at this point yet, but we need to hold really above 88, and I think more likely above 87.75. And if we can do that, I think if we saw it down there, probably a buying opportunity down around this sort of level here, and I think if we do sit down, there's probably a buying opportunity, as I say, for a move up towards 88.5 and eventually up towards 89. The Aussie, well, that topped out yesterday just below the neckline of the head and shoulders that we were watching. I suspect the market was getting itself a little bit long, expecting a break. I know, unfortunately, I certainly was. The FOMC minutes, the FOMC decision has taken the US dollar strongly higher. The Aussie weaker, down to a low around 90.20. Now, as long as this holds, this is the first FIBO support. As long as 90.20 holds, we might be okay and see a slow squeeze higher. But the 4-hour indicators are not suggesting that's going to be the case, and a break of 90.20 would see us back down below 90, the figure, and towards this sort of rising trend support at about 89.75. And then below there, we're heading down to the next support, which comes in around 89.25, which ties in about with this low here. So the dailies, well, this is the head and shoulders that we've kind of been watching. I guess we haven't lost all hope of that yet, but certainly this is going to shake the market out. And it looks like we're sitting and trading really between the 100 and the 200-day moving average, sort of 90.25 and 91.40. Now, if we did ever see a break of 91.40, as I've said before, then I think we're headed fairly strongly higher. That's looking a little bit unlikely at the moment, and it looks to me as though this 4-hour, the right-hand shoulder on the charts here is becoming very mature, and it slowly looks as though it could unwind. Now, if we break down below this support down here, around 89.25, then I think the Aussie could be in quite serious trouble. But until then, use the 90.20 to 91.40. We're not going to see it up there. Probably 90.70 on the day covers the top side. But as long as 90.20 holds, I think we're okay. A break of 90.20 would see quickly below 90 figure. This is like here's about 89.90, and then as I say, we're heading back here down towards 89.25. The Kiwi, well, I'm not sure if the Kiwi's put in quite a medium-term top up here at 86.40. It fell sharply. We've just had some data out to the fourth quarter GDP, came in as expected, but the Kiwi's lower, and it looks as though it's building up a bit of negative momentum. It could take us back, if the worst came to the worst, it could take us back here to sort of 84.20, but I think nearer home, we've got this rising trend support. That comes in, it's around 85 the figure. And if that goes, then I think we're probably headed quite sharply lower. But until then, look for 85 to 85 the figure to cover it. I'd keep stop losses at 84.70, and if that goes, then as I said, we're probably headed back down here towards sort of the low 84s. The 4-hour indicators are looking negative, so once again I think rallies on the day are probably a sell. Doubt we're going to go much above 85, sort of 50 really. If we saw above 85.70, I'd be surprised, but I'd keep stops on new shorts above there for the time being. Now I'll just have a look at the dollar index. We've held this support just above 79 figure 10, where there's support. I'll show you on the weeklies in a minute. But we've rallied up here. We've been up to 80.11 today. Now the dailies, which had been pointing lower, have actually turned quite sharply higher. The first resistance, we're currently sitting just under 80 the figure, but the first resistance here is at 80, so 45, 46. And this descending trend support, that's around 80, 55. If we take that out, then we're heading back up here to the 200-day moving average at 81. So just bear that in mind. And it is beginning to look as though dips might be buying opportunities in the dollar index, and that we are in fact going to see a stronger US dollar over the course of the next few days, although possibly it's done its run for today. Now if we go out and have a look at the weeklies, as you can see, we have rallied strongly this week. We're above last week's high, and the weekly indicators, which had been pointing quite sharply lower, now they look as though they're trying to turn higher, but we've got a long way to go before they cross. But we're back above the 200-week moving average here, which is at 79.83. So that should be, that was 79.80 or so. That should actually provide some support. And as long as we don't go back below there, then I suspect we are probably going to go up and have a look at this this descending trend resistance, currently at around 80.50. So that would be it for the next couple of days. If we go above 80.55 or so, we've got the 100-day moving average, as I said, at around 81, the figure I think it was, and then the 100-week moving average is here up at 81.12. So that's about it today. I don't think we're. I think we've probably seen the move for today, and certainly until the New York market gets back in, I think we're probably just going to consolidate around here. But it's going to be pretty choppy. But overall, the main thing looks to be one of buying dips in the US dollar for a bit more of a rally, and to squeeze the dollar shorts a little bit further. So that's about it for today. Have a very good one, and talk to you tomorrow. Cheers.